All right, we want to welcome everyone to another live Q&A here at School of Sharks. It's an absolute pleasure to have everyone. My name is Dan Diaz. I am your host, and we want to welcome you once again to another live Q&A. Why does this community exist? We believe here at School of Sharks that not one person has all the answers and no one has the monopoly on solutions and problem solving. We believe that bringing together the collective genius of a lot of successful real estate investors is really what's going to allow everyone to succeed. We believe that alone you can go fast, together we can go far, but united we can certainly go farther faster. And with that in mind, we went ahead and invited a very special friend and a very special guest for us today. You guys may know him. You might have done business with him. If you haven't, I certainly recommend that you do. Before I bring him on board, I want to tell you a little bit about him. He is a certified risk manager and founder of RiskWell, an independent insurance agency and risk management consulting firm located in McKinney, Texas. His team operates in 37 states and counting, with a major focus on education and empowering current and future clients in the areas of risk management and insurance. Guys, check this out. They protect over 5,000 residential and commercial properties with a combined amount that they insure of $3 billion with a B. Do you think he can provide a little bit of insight to how maybe you can protect yourself? I think so. RiskWell has extensive experience in working with every category of real estate investor in every class of property. They are eager to help deliver answers and fix problems for their current and future clients. And he really is a recognized leader and innovator in the insurance industry. His podcast has more than 3,000 monthly investors. I think that's up to 5,000 now. So we're super excited. Guys, without further ado, please help me welcome Mr. James Jenkins to the platform. Thank you so much, James, for being here. The platform is all yours. Let's tell the audience a little bit about who you are, what's your background, and how you're able to help the community in your sphere. Please do.
Awesome. Well, thanks for having me, Dan. Obviously, it is a privilege. It's an honor to be included in this School of Sharks. Pretty cool little concept you guys cooked up there. So I appreciate being able to have the opportunity to add value. It's not the typical seat in a group like that, when you got guys like TJ and so many heavy hitters that are actively doing deals, moving and shaking and whatnot. But we definitely are able to add value to the process as a trusted partner for several hundred investors in the DFW area and almost 1,000 nationwide. So what direction you want to go, man? I talked for a living, so we can go anywhere you want.
First of all, you can't be slinging TJ's name around like that. He's a cool cat for sure.
Yeah. No, I mean, the people that are in that group, I mean, Will Crozier and whatnot, I mean, like, there's some really heavy hitting people. I mean, Ryan Jackson as another example. I mean, people that are delivering consistently good content and value. Just to name a few, I think you have more than 2,000 members in the School of Sharks now, which is fantastic for 3 or 4 months we've been in existence. That's wonderful.
Yeah. And you're absolutely right. And the people that we brought in as Sharks, I wanted the members know that these are not random people that we brought off the street. These are individuals that we've either done business with personally or I've known. How long have we known each other? About 2 years now?
Yeah, about that.
I don't know if you remember how we originally connected, but it had to do with a random post when my wife and I were going to visit South Africa. Mm-hmm. And you told me, hey, I've never been there, but there's a good buddy of mine in the insurance industry that talks about going there all the time. I think y'all should connect. Yeah. Well, you might not know it, James, but we've become really good friends. He invited us to his house in New York a couple of weeks ago, and we're actually headed to Costa Rica next weekend. So
with Springer?
With Springer, with Robert, yeah. Him and Jasmine.
Oh, so, man, he is A+. Love that dude. No,
so the power of community, the power of community. But anyways, let's talk about some of your biggest strengths. And I'd love to ask you that from a business owner's perspective and as an investor. A lot of people don't know that you are an active investor as well. what would you say are some of your biggest strengths?
I think really the first one is just simply grit and mental toughness. Um, the world in the insurance space is so saturated. It is so overrun with commodity thinking. It's every bit as bad as it is in the real estate world. The supply and demand has never been worse in DFW, I don't think. But the ability to just keep rolling no matter what happens. The grind really doesn't ever stop. Our operation is set up in a fully digital and innovative perspective from technology. Requests come in literally 24/7. But we have set things up so that we're able to take time for our families and have a little bit of sanity and rest once in a while. But grit and discipline and determination, I think, really are absolutely critical ingredients. The second thing I'll say is simply never stopping learning. I've been doing this for 9 years in the insurance world. I've been focusing heavily on real estate investors for a little more than 4 years. But I consume new information every single day. I am committed to continually building my skill set, my knowledge base, my ability to give good advice to our clients and develop my team because Addie and Amanda and the other people on our team, they lean on me to be as sharp as possible. And I'm the limiting factor on my team of 6 people. If I'm not continually growing and developing, they're going to slow down too. And that's not okay, obviously.
I love it. I love it that you mentioned grit, which is sometimes hard to understand. We think we have it, but not a lot of people do. For example, the holidays. A lot
Yeah.
of people slow down during the holidays, and I know you don't.
Nope.
And just because I'm taking off to Costa Rica doesn't mean the team is. I
Yeah.
mean, we are pushing marketing and deals, and before the month is over, we're going to close a few more deals to knock off the year. So grit is super important, guys. If you guys are listening, as a reminder, we're using a service called StreamYard. I know a couple of y'all have done it already, but in order for you to comment and let us know who you are, you do need to give permission to StreamYard. And of course, we'd love to hear from you. So let us know what's your market and where you're from and what's your specialty when it comes to real estate investing for sure. Let's talk about weaknesses because this is not all fluff for sure. What
No.
would you say is one of your most challenging weaknesses that you've been able to overcome, and how?
And I don't know if I fully overcame it. It is really my response to the velocity that our business moves at is, to be, unintentionally short and direct, perhaps too direct and abrasive at times. I'm not known for my naturally soft-spoken, kind and gentle demeanor, which gets me in trouble sometimes. I not so
Don't believe that you're a teddy bear.
yeah, I'm definitely a teddy bear. I kind of jokingly refer to myself as the unintentional asshole because uh, I have received that counsel several times over the years from people who care, who want to see me improve. I'm definitely better than I once was. The people that are still clients of mine that have been around for a long time. Um, I'm not going to name drop in here, but you know who you are. There's several people on this call that have been with me for a long time. They've seen an evolution for sure of being intentionally kind and just thoughtful about the way that I talk to people instead of being pure business, pure efficiency, and just ruthless about let's go, move on. That people don't always respond well to that approach.
Yeah, I agree. We are all at the end of the day human beings,
Absolutely.
and sometimes the human factor is eroded, through time. So I really do appreciate that you humbly recognize that that's something you may personally have to say. So Hale says, I can so relate to that comment, unintentional a-hole.
Yeah.
Probably more than one of us have gotten that before.
Well, I mean, I think that's definitely something that anyone who's got an alpha personality, who's high achievement, high drive, man, that is a classic weakness of that personality type. And, you know, it, It's mine too. I don't mind saying it. It's definitely something that I'm aware of and continually trying to be better at, because yeah, lots of personality types do not respond well to that approach.
It happens. It happens. Let's talk about accomplishments. What accomplishments are you most proud of? And here, you're more than welcome to open up. It doesn't necessarily have to be, the $3 billion under management and assets, or the
Yeah.
5,000, policies that you've got. But in general, what would you say is one of your greatest accomplishments? This can be personal or business, or family. What would you say?
I'll start with family because that really matters the most to me. It's always a balancing act on social to disclose enough of my personal life so that people understand how important faith and family is to me without, disclosing too much and having people that don't know me have access to my family and kids, see pictures and information that's none of their business. But I think my greatest accomplishment is that my wife and I have been together for almost 11 years, and she's still here. She's still into me after 11 years. And both of my kids, they know that Daddy loves them, and they are confident in who they are as little people at this point. Obviously, they're still young, but when I get home, I get a "Daddy, we missed you," and a kiss and a hug, and that is the absolute best. That is the most important accomplishment I will ever have, is raising my kids to be good humans, to be kind and generous and bold and taking action and whatnot. From a business perspective, it has nothing to do with insurance. I was
Ooh,
challenged
tell us more.
earlier this year. I was challenged to start a podcast by one of my colleagues in the industry. And I said no. I said, I'm not interested in that. I'm staying focused on building RiskWell. And I don't need to divert or dilute my focus. There was some pushback on that, and I ended up deciding that yeah, I'll do that. And we launched a podcast back in May from zero. We don't advertise. We don't do anything to promote it with dollars. It's purely organic. And in the last 30 days, we've crossed over for the first time ever 5,000 downloads on that podcast. The unique listeners is almost 2,000 monthly unique listeners, which in 7 months with no advertising spend, it's pretty absurd growth for an insurance podcast. Almost entirely industry people, agents,
I
and
have to agree.
yeah, it's not normal because, let's be honest, insurance is perhaps the least sexy topic we could ever have on the School of Sharks. There are many things that are more interesting for most people to talk about than risk management or insurance. But yeah, I'm in the middle of figuring out which direction to take the book in. I have more than enough content to write a good book talking about launching an insurance agency and how to be successful in this industry that I'm in. And that'll probably drop January of 23, if I had to guess.
Nice, nice, nice. Now, in the comments section, if you're able to, did you want to put a link where the
Oh,
folks
yeah.
can
I'm trying to
see?
figure out how I access the comments here. I don't see.
So, in the if you're not able to do it on the comments section, do you see the
Yeah, I'll
private
just put in the
chat?
private chat real quick. Hold on a
Yeah,
second.
and then we'll go ahead and copy and paste for sure. Where do you normally? Why don't you just tell our listeners as well? Where
Yeah, if you just listen, if you type in agency freedom to any podcast network, Apple, Spotify, Google, Stitcher, whatever you're into, we're on all of the platforms. I will say there is a lot of content that is relevant just to general business ownership. We do talk quite a bit about, sales and marketing and managing a team and positive headspace. Lots of stuff about accounting and finance and business operations and best practices for managing cash flow and profitable growth and whatnot. There's a lot of content that is specific to the insurance industry that some people may not find as useful, but there's also a lot that is to a general business audience.
Very cool. We went ahead and plugged it in the comments section. So
Sweet.
thank you so
Good
much
deal, man.
for sharing.
Yeah.
What do you? Let's talk about enjoyment. What do you enjoy most about being a business owner, an investor, someone who's dedicated to growth?
Yeah.
What do you find most enjoyable about this process?
I think it really is the freedom to be and to do as you see fit. That is what is so great about this country that we live in. It doesn't matter who you are, where you come from, who your parents were, what color your skin is, who you choose to love, where you're from. It doesn't matter. We are the very definition of a meritocracy. You get what you earn. You are compensated in return for the value that you deliver to other people. And that to me is incredible. I love that there is no limiting factor to what I'm able to do. The daily operation is only limited by my imagination, my work ethic, and how much I've put into myself to be of value to other people, whether that's delivering an insurance product or hopping on a call and giving someone a piece of good advice, or coming alongside them when they've got a really bad day where a house burned down or a tenant shot someone or they're getting sued or they've had a breach in their system, a cyber liability or a data breach event, and their customer data has been compromised, and now they've got lawsuits and fines and penalties. There's so many different versions of a bad day that a client will experience that I get to be a part of making that better. My team gets to come alongside them and make that really bad day a little bit better. And from an existential perspective, that means a lot to me. That's why I got into this industry, was knowing someone's going to have a terrible day. Something awful is going to happen. Maybe it's a car accident. Maybe it's one of the other examples that we just mentioned. Maybe one of your employees falls off a ladder and has a serious medical injury, and the work comp policy that we delivered to you makes sure that you don't come out of pocket for those medical bills. There's so many different applications of the work that I get the privilege of doing for our clients. But I think that really is my favorite thing. Being in the real estate space, every single investor has a different story. Every single person watching this live or watching the recording later, your story is unique. Your operation is unique and different from every other investor. And that's probably what I enjoy most about the real estate space and why I've stuck with it for 4.5 years as such a heavy focus, is every investor is a little bit different and enjoyable to work with for different reasons. So I know that's a lengthy answer to a rather simple question, but I think that's where we are.
No, absolutely. I really enjoy the way you brought it back to human connection and the fact that you're able to positively impact, someone, which I think is really nice. If you don't mind, I'd like to dive a little bit deep into your specialty, which is obviously insurance. From your experience in nearly 5 years of insuring specifically investors, and I know that ranges everything from fix and flip to rentals to burst to commercial. Where do you see some of the biggest gaps, some of the things when you get a new client and you're like, you know what, let me take a look at this because I'd be willing to bet that there's a gap there that you need to look at or you haven't seen. What would you say that is?
Well, it is a piece of content that I know you're going to be delivering, asking those 5 questions of your agent. It's going to be in the School of Sharks at some point in the next several days. So I'm not going to steal from myself in the content that I've already given you. What I will say is probably the biggest challenge that we find with a lot of investors is they are so focused on driving the cost as low as possible that too often they are too eager to take on too much risk for themselves. There's always a balancing act when you're having an insurance conversation: the cost versus the benefit, the amount that is put at risk for future losses versus the amount of cost you have right now at this moment. And I think too many investors, I wouldn't say a majority of them, are making what I would consider to be a short-sighted or potentially foolish decision. But a lot are, they're buying a policy without understanding exactly what they're buying. They're just checking a box, or they are, slicing out coverage in the name of saving $50 here, $75 there. And then, you have a loss come up that isn't covered and you end up spending 15, 20, 30 grand on something that you could have bought $100 worth of insurance on. So the cost benefit analysis, I think, is skewed a little bit more towards cost than it should be. People think of their insurance program as a commodity at a much higher percentage in the real estate world because, the return on investment, the net operating income of a cash flow property, that is the key metric. How much are you able to squeeze out in net profit on a monthly and annual basis? And I think the insurance program too often is the piggy bank that people go into to return more money to their bottom line, which more times than not, it ends up coming back to bite you eventually.
I agree 100%. I just got a deal this morning, and within 15 seconds, I realized the numbers were not there. But it's funny because I was talking to the wholesaler, and I said, "Help me understand, your numbers. This, and this." And then he says, "Well, I'll tell you where you can save. If you call your insurance guy and you tell him that you're living in it, a homeowner's policy, people don't know this, but it's cheaper than a landlord policy." And I'm like, "Oh my God, I need to share this with James. Like, are you kidding me?" So let's talk about that example. What would be the repercussions of doing something like that?
Well, for starters, if you intentionally misrepresented the material facts to your insurance company, for
That's what I
one,
was told to do.
yeah, well, that's what I was told to do. Well, the wholesaler didn't misrepresent stuff to the insurance company. They didn't put something in writing that was known to be a false statement. You're not necessarily going to find yourself with a criminal proceeding, but you're very easily going to find yourself on a blacklist with that carrier, and you'll never be able to get a policy from them again. If they know that you intentionally lied to them, you're probably going to end up on a blacklist. Aside from that, there's some very different coverage items that just don't apply the same way from a landlord policy to a homeowner's policy. There are some provisions that you will get with a homeowner's policy that you won't get for a builder's risk, a flip policy, namely is vacancy provisions, water damage coverage. There's a lot better coverage items available in a homeowner's policy because the insurance company is perfectly okay with it because it is owner occupied. A tenant occupied property, the risk classification is completely different. The exposure is different. The cost of the insurance is different because without getting into the nuance that nobody really cares about, the insurance company is applying a price to the risk that they're aware of. If the risk has changed, the price would change significantly. The coverage goes right along with the risk. So if you're lying to an insurance company, man, stop, because I guarantee you, you do that more than a few times, and you're going to be caught with the lie. And at that point, then you'll lose whatever company you're working with. And there's only a small number of companies that are really competitive for the investor space in the state of Texas. And I know there's a lot of people that are listening from outside of Texas, but whatever state you're from, most of the usual suspects, they don't like working with professional real estate investors. Travelers, Safeco, State Auto, Progressive, et cetera. They're perfectly okay if you're a onesie twosie sort of investor. But if you're someone that's doing flips, they don't want you. If you've got anything more than 7, 8, 9 rental properties at the most, all of the normal companies, quote unquote normal companies, are not interested in writing you. The captives won't either if you have anything larger than a very small rental portfolio. Farmers, State Farm, Allstate, et cetera. They're perfectly okay with an inside the box investor. Anything other than that, especially if you're getting into creative financing, if you're doing sub 2, if you're doing more interesting things like a small multifamily, 8, 10, 12, 14 unit property, if you're doing commercial, if you're doing anything more, alternative asset classes like self-storage units, for instance, mobile home parks, anything that's got a little bit of hair on it, you really need to be working with someone that specifically has experience in the investor space. Because every agent out there, and this is the hard part, I say this in full knowledge that it makes me sound like I'm just selling and talking bad about the competition. Literally, you post on Facebook right now, "Hey, I need insurance for a deal." You will have 50 comments 6 hours from now because freaking everybody knows 3 insurance agents. The qualifications to call yourself an insurance agent are some of the lowest in any industry. You sit for one licensing exam and you pass it, and then you can call yourself an insurance agent. That is terrifying because there is so many ways to screw up an investor's operation, to cost an investor a lot of money by doing something wrong, just from simple carelessness or lack of knowledge. So These, run-of-the-mill generalist agents where you go to their website and they've got some corporate logo where they do have nothing special or unique. Good luck if you're working with one of them, because it's a total crapshoot if they have any idea what they're talking about.
I believe you. I believe you for sure. We've got a couple of questions from the audience. If you're okay, we'd love to take care of them. Bhaskar has a real good question. What are some of the policies that exist for investors that you routinely find that investors didn't know about, but they could benefit from?
I think the first one, specifically because of the volume that we run into, is there's a very big difference between purchasing a vacant property policy and having an endorsement on there for builder's risk or course of construction. There's a very big difference between buying one of those vacant property policies and buying a true builder's risk or a flip property that is built from the ground up and designed for a flip operation where you are doing, 20, 30, 40, 50 grand, maybe 100 grand, maybe 300 grand, depending on the property worth of renovation. I think that is probably one of the most common. The second one that I definitely need to mention, because so many investors fancy themselves general contractors. You know who you are watching this. You think you're going to save 10 or 15% on your deal by not hiring the paper GC and just doing it yourself and subbing out all the trades. If you're serving as your own general contractor, then you have a general liability exposure. And if one of your subs does something wrong and causes a third party financial loss, or God forbid, someone gets injured or killed on your job site, you're going to get sued right along with the subcontractor or the tradesperson. So if you're cutting corners and acting as your own GC, and you're not buying general liability insurance, good luck. I hope you enjoy rolling that dice, because one of those times it's going to land on snake eyes, and then you find yourself in a whole lot of trouble.
Gotcha. So it's the general liability risk that you see that a lot of investors don't do.
They just skip it entirely because they don't want to bother with it.
Wow.
They feel like, oh, nothing's going to happen to me. I'm fine.
And picking a vacant house policy when in reality it's a flip, and they need to be getting additional umbrellas.
Or just buying a dwelling fire policy because, the random insert carrier here or Goosehead or whatever the agent is wrote a dwelling fire policy instead of a true builder's risk. I can't tell you the number of times that someone has come to us because their previous agent made a boo-boo and the investor is stuck fixing the problem. And they come to us and say, hey, can you help? And of course, we've done it more than 5,000 times at this point. Now, of course we can help. It's just a matter of how much money you're spending before you come to us and get it done right.
Very nice. Somebody else got a question. Is an umbrella policy needed in addition to general liability?
It depends. It really does. A lot of investors, if you don't have a rental portfolio that is more than, say, 3 or 4 properties, anything less than 3 properties, you're probably okay going with the regular policy, because all of our policies have $1 million in liability protection per property. It's not a shared limit. Each individual property gets its own $1 million bucket of coverage. The umbrella policy starts to become relevant once you start stacking up those rental properties. Anything more than 3, and I think absolutely you should look at having a rental, an umbrella for your holding company. If you don't have 3 rentals, or if you're doing that revolving door of flips where you'll have 2 flips going at any one time, you're probably okay skipping the umbrella. But from a cost versus benefit conversation, the umbrella, in my opinion, is a really good idea to have, just because you're going to spend maybe $1,500, maybe $2,000 on an annual basis for a typical umbrella policy that has 8, 10, 12, 15 properties sitting underneath of it. You're probably not going to have a loss that requires the umbrella. You're probably not going to have a domestic disturbance or discharge of a firearm or some sort of abuse and molestation, or just a normal thing where there's a house fire and someone was injured and goes to the hospital, and they sue you right along with whoever else is involved in that situation, just because, let's be honest, we all know that's law school first day, right? When they open the textbook, their law school textbook, what's the very first thing that it says in chapter 1? Sue everybody.
Sue everybody.
Everybody's going to get sued when something like that goes down. The contractor, the GC, the property owner. If there's a manager, that property manager is going to get sued. Everybody gets sued when something goes down.
Yeah. Yeah. Wow. Very, very good. Good reminders. Guys, this is absolute gold. If you guys are liking what you see here, please do me a favor, like, comment, engage, and share this on your personal walls. We have a personal goal to grow this group and this community and impact 100,000 lives in 1,000 days, and we can't do this without you. So you guys are the reason we put this together, and we want you to take advantage of it. We got a couple more questions, and we got this one from Facebook user who did not give permission to StreamYard, so we don't know who you are, but we think you're cool. James, do you insure wrap mortgages?
Now, I knew you were going to pick this one, and this is the only thing that we don't do. Are you okay if I give Red a shout out?
Sure, please do.
Yeah, Red Manny is a Goosehead agent in the San Antonio area.
Can I also say he's my personal agent for wrap mortgages? Is that okay?
Yeah, good agent. He knows what he's doing. He'll do a good job. He has access to all the usual suspects from Goosehead, that company. That's another conversation for a different day. But RiskWell, if we have a relationship with the investor, we will not do the wrap mortgage, because there was 2 situations where there was a conflict of interest where the person who was on the wrap mortgage as the buyer had a severe disagreement with the investor that sold them the property. And we had an existing relationship with the investor, of course. And so we were stuck between 2 sides of an argument, and I vowed I would never do that again. If I have to choose between the buyer of a wrap property and the investor, I choose the investor every time.
So to kind of recap, because I want to make sure the message isn't lost. If an investor purchases a property subject to the existing financing, and they're going to hold it in their internal portfolio, either for rental or short-term rental or whatever, that is something that you insure, correct?
Absolutely. Yeah. And we have done that many hundreds of times.
However, when they go ahead and take that subject to property and wrap it to an end user, owner occupant, that's where you draw the line personally. Correct?
Exactly. That is precisely what I will not do.
Awesome. Good
It just creates an opportunity for a bad client experience. And I'm not okay with that. The client experience is everything to us. We're very big picture focused. Most of our clients have been with us for multiple years, multiple policy terms. I will never, look to make a quick buck at the expense of the client experience. I'm just not okay with that.
Good. Bhaskar's got a question. Do you invest in real estate yourself? If so, what area of real estate?
I have done a couple of private lending deals on the small side, typically below the threshold of a typical, hard money lender, like an Easy Street Capital or Black Label or, Freedom Home Loans. Or there's so many good hard money lenders in the DFW market and other markets in Texas. I've only done it twice myself, and both times it was we had a situation where we had some extra capital sitting around and wanted to make a few bucks on it. So we, flipped it into a small private loan on a short-term flip and, made a few grand, and everybody wins. At this point, my real focus is on the agency. But at some point I will definitely have a rental portfolio of my own. And I'll probably be signing up for Dan's class on owner finance notes. I'm a big fan of notes, and I will probably own lots of them 5 years from now.
Good. Hey man, whatever I can do to help you get there. I mean, that's really the goal for sure. Interesting question. Facebook user, do you provide coverage for a property purchased in a land trust? Ooh, good question.
Yeah, it really depends on the carrier. We'll probably have to go to one of our surplus markets, just because a lot of insurance companies get weird and squirrely when you start, putting trust as the first named party on an insurance policy. Your normal suspects, your Travelers and Safeco, et cetera, they don't want to do that. You can have a trust as an additional insured, but a lot of times that means putting your personal name as first party on an insurance policy, which means you're kind of defeating the whole purpose of having the land trust to begin with. So we would need to take that to the surplus market and place it with one of our specialty carriers. But yeah, we can definitely do that. We've done that quite a few times for existing clients.
Good deal. Question, Facebook user, guys, if you want to know you want us to know who you are, you got to get permission to StreamYard. Nevertheless, it's a good question. When buying a sub 2 I hear lots of people saying they leave the seller's insurance in place. Dear Lord. We
No.
always get our own, and then we have the seller cancel theirs. What do you recommend?
Well, Facebook user, whoever you are, you're probably doing it correctly. The way that we recommend, and whether it is, Grant, Kemp, or Pace Morby, or any of these other sub-2 coaches out there, I agree with Grant and Pace in the way that they suggest their students do it. You need to get a power of attorney in place. You need to have the ability to cash the check from the insurance company. You need to have the ability to talk to the mortgage company and add your entity on the deed as a property manager. That's typically what we recommend. And I have to preface this by saying, in case you didn't know, I'm not an attorney and this is not legal advice. This is for informational purposes only. My attorney said I have to tell you that because this is not legal advice. I have been told that this is
only
potentially
for
good advice.
entertainment purposes only, not even educational purposes for
Yeah.
sure.
Yeah, there you go. So the short answer is you buy your own insurance, you wait 10 business days. That's plenty of time for most mortgage companies. Even you, Mr. Cooper, I'm looking at you guys because y'all are the worst on sub-2s. We always have a hard time with Mr. Cooper loans for some reason. But if you wait 10 business days and then cancel the seller's policy, by that point, the mortgagee has almost certainly removed the previous policy from the file. And so you're not going to trigger any due on sale clauses.
Very nice. Great tip for sure. That was Lisa Edwards. She doesn't know how to register her name to show up. It's okay. It's all right. We still love you, Lisa. Man, this is like super gold. I mean, I really do. I really do like everything that is kind of being shared with us. Now, I know your time is super valuable, and we really do want to extend an appreciation for you. Before we kind of start wrapping things up, what words of advice can you share with the listeners that can perhaps help them in their business or even with their insurance needs? What kind of words of advice
Sure.
you can share?
I will stay to the value side of the equation. Anybody who has listened on the podcast or seen some of my other content online, I'm really pointing out the 3 levels of selling right now. And this goes for insurance or any other vertical. If there is a professional service or a product that's being bought and sold, the first level of selling is price. And it's just price. It is a zero-sum game. Whoever delivers the lower price wins. It's not a complicated conversation. Level 2 is product. For the insurance world, that is the carrier, the coverage, the deductible, the available options. There's so many things we could talk about that are product related. The problem I have with those first 2 options is they are commoditized. There is no unique value. Anyone in the marketplace can offer the same or better price, the same or better product, and there's nothing distinguishing from one office to another. The third level of selling, which is applicable in real estate, certainly in sub-2 side of things. If you're dealing with distressed property, there's any number of ways, even just traditional owner finance. Third level of selling is selling based on the problems that you solve. Getting the other party to recognize that you solve more problems than their other option. In the insurance world, it means that we know this stuff better than our competition. We're able to offer better advice. Our technology at our office is set up in such a way that working with RiskWell is faster and easier. We simply solve more problems than the run-of-the-mill agent who's not going to know how to answer that complicated question that comes up once in a while. So we don't sell on price. We don't sell on product. We really try to focus on selling based on the problems that we solve, the value that we add to the relationship, rather than commoditizing ourselves and just whoring ourselves out for insurance premium like so many agents do.
I like that. So to recap to our listeners, you can either sell on price, which sucks because you can't profit if you don't charge money. You
Yeah.
can either sell on product, which, like you mentioned, it's kind of a commodity. Everyone's going to end up with similar results. But where you can really shine is to sell on service and the result, and on problems solved.
Yeah.
I like that. I like
Deliver value, solve problems. If you do those 2 things, I guarantee you'll be successful in sales. 100% guarantee it.
Over deliver. So some people say they like to over what is it? Over promise.
Under promise, over
Under
deliver.
promise and over deliver. I said no. Over promise.
Over
And over
promise
deliver.
and over deliver.
Over promise and over deliver. I mean, you want to absolutely, for sure.
Run your mouth and then find a way to deliver on it.
Run your mouth. I like that. Run your mouth and then figure out how to deliver on that, guys. If you guys have found value in this small live Q&A, we want to thank you guys for being here. It's been an absolute pleasure having James. It's an honor having you, not just on School of Sharks, but being someone that I can call a personal friend and someone that I can reach out. And if anybody needs any insurance, either questions or advice or policies, I mean, there's no shame in a plug. Please reach out to James. Now, what I do want to share with the group is that if you have enjoyed, having him here, one, like, comment, share, and engage, help us grow the community. But I do want to let you know that in the next few days, James is going to take time out of his schedule to deliver a few key posts that you guys have accustomed to. So here's a little bit. I kind of want to whet your appetite. On Friday, he's going to be giving all of us homework. He's going to share and post one thing to help us get our mind right that he uses over the weekend to strengthen your family, your outlook, or your happiness. Saturday's post is going to be a story relating to a particular challenge or lesson that he had and how he overcame it in detail, and hopefully that'll help us grow if we can relate to it. Sunday, we'll be sharing one thing we can do to jumpstart our week. And this is going to be an invitation to the group. It's going to be a challenge. So if you guys accept that challenge, we want you to comment, yes, this is a community about mutual growth. Now, you might be wondering, why is the challenge on Sunday and not on Monday? I got news for you. Business owners, we don't start our weeks on Monday. We prepare our weeks on Sunday. So that's why that's going to be delivered on Sunday. Monday, he's going to be sharing one or two negotiation tools and scripts that work for him and can work for you. And Tuesday, he's going to be sharing tips that can help you boost your business. So, guys, this community is all about growth. It's about sharing. And again, if you guys like what you see here, please like, share, engage, comment, and invite your friends to the community. Any last words you want to leave the group with, James? The floor is all yours for a moment.
No, thanks again for having me, Dan. And Bhaskar, for sure, I appreciate the opportunity to connect with you guys. I want to give a shout out to Addison Sapp and Amanda Ivanchik on my team. Those two young ladies do a phenomenal job. The real secret is I am no longer involved in the day-to-day operation of the real estate department at RiskWell, but I have those two young ladies and a full-time VA who's Philippines-based. All three of them are at your disposal for whatever solutions you need. Unlike so many of these schleps posting on Facebook that are sitting there pecking out at their keyboard at 9 p.m. because they don't have an actual business, an operation. I have three full-time young ladies that are ready and eager to help deliver those solutions for you. And I would be remiss if I didn't give them a public shout out. They do a fantastic job. So I'll just leave you with our little tagline. Life is risky. Risk well, and thanks again for the opportunity, Dan.
Oh, very much. I love that. Life is risky, so risk well. Thank you so much, James, for being here. Thank you so much, guys. You guys have a great one. We'll see you guys during the week. Take care. Bye-bye.